Good afternoon, and thank you for joining us today. My name is David Talbot. I'm Managing Director and Head of Research at Red Cloud Securities, and I'm delighted to host a webinar on uranium today, especially as spot uranium hits $106 a pound. So we are going to hear from Skyharbour Resources CEO Jordan Trimble. Now, during today's webinar, he will provide an overview and outlook. Then we'll take some questions, and you can type your questions into the chat box at any time. We'll get to as many as we can. But before we kick things off, first we need to discuss the fine print. During this webinar, forward-looking statements may be made. I direct listeners to the forward-looking statements outlined on page 2 of Skyharbour's corporate presentation, and that can be found on the company's website, skyharbourltd.com, and Skyharbour being spelled out with O-U-R at the end. So for Red Cloud Securities, Inc., I'd highlight this webinar is for information purposes only. It should not be considered a solicitation or recommendation of buy or sell securities. We note this call does not consider the particular situation or needs of all investors, and participants should rely on their own investigation and seek their own professional advice before investing. So please see our most recent research located on the Red Cloud website for specific disclosures on Skyharbour. So with that, I now turn it over to Jordan to update the audience on his company. Jordan.
Great. Well, thank you, Dave. Thank you, Red Cloud, for hosting this webinar. Look, very exciting time for the uranium market and for our company. For those of you who follow us closely, you'll know that we've been busy the last year. We've been drilling, we've been acquiring projects. This year, and I want to just highlight that point. The drilling last year was the first drill program we carried out at Russell. We're planning another 5,000 meters of drilling at Russell this year, starting here shortly. This is going to be a pivotal program for us, and I'll get into the reasons why. But bottom line is, we really do think this project is about as ripe as it gets for a new high-grade discovery in the Athabasca Basin. We've got a good lay of the land now at the project. I was up there just a few months ago going through some of the targets for this upcoming program, and very, very excited. I think this is going to be the biggest 3 or 4 months that we have as a company with the drilling that we have planned at Russell. Now, what's exciting for us, though, is not just the drilling at Russell, but for the first time ever in our company's history, we're going to be co-advancing our 2 flagship projects now, Russell and Moore. I think there's probably people that know Moore Lake very, very well because it was our flagship prior to our option agreement with Rio. This project has delivered some major high-grade drill results previously. We had results in 2017 at the main Maverick zone at 21% U3O8, over 1.5 meters, 6% over 6 meters. More recently, 2 or 3 years ago, with drilling that was focused in the basement rocks, we announced a new discovery, a high-grade zone at the East Maverick zone that returned 7% over 2 meters. And so we know there's high grade there. We're continuing to work on a resource estimate. Part and parcel with that, though, is this 3,000 meters that will be commencing in the next few months on the back of the initial 5,000 meters at Russell. And a part of that 3,000 meters is going to be, for the first time in 5 or 6 years, expansion drilling at that main high-grade zone, as well as some regional drilling at the project. So the next, again, I can't emphasize enough, this next few months with this single largest seasonal drill campaign, 8,000 meters that we're carrying out. It's going to be, I think, a transformational few months for the company and our shareholders. Now, we're fully funded with over 10 million in the treasury. Continue to have money coming in from partners, and this budget that we have for the first few months, about 3 to 3.5 million. So we have lots to spare to continue drilling right through this year in the summer and fall months. So in a great position. We're the strongest we've ever been financially. And we've got what I think will be the best drill targets that we've had collectively at those 2 projects that can both deliver new high-grade discoveries and expand existing resources. So that's Russell and Moore. But for those that know our story inside and out, you'll also know that we've got this dual-pronged strategy, prospect generation, and this part of the business is continued to evolve. We've got a handful of partners now that are funded that will be carrying out exploration and drill programs this year. Our two joint venture partners, Azincourt and Orano, both of them, and Orano in particular, first time in several years that they're planning a work program at the Preston project, but both of those companies are expected to be carrying out field programs this year, and we are expecting of the option partners, 3, potentially 4 of them either drilling or carrying out exploration programs at some point this year. So very catalyst-rich 12 months coming up for Skyharbour. In addition, as I mentioned, we've continued to add to our project portfolio through staking and through property deals with other companies and prospectors. We're continuing to do that. As we've seen this market continue to surge higher, we're getting, just even in the last few weeks, a lot of inbounds on potential new partner companies. So I expect we will be able to continue to add to our prospect generator business over the coming months. And last but not least, we've seen a lot of M&A pick up in this sector, in particular in the basin. I expect that trend to continue. Skyharbour, we are very much looking at an end goal here of a corporate transaction, hoping to get best price, best timing we can. But as we continue to see, again, the market move higher, I think we'll see that trend continue, and that's very exciting potentially for us and our shareholders. So I'll get right into it, and then I don't want to take up too much time. I do want to leave some questions for some time for questions. Disclaimer, forward-looking statements, please do read this on your own time. So investment highlights. Skyharbour Resources is a high-grade uranium exploration, early-stage development company and prospect generation business. Been around for 10 years. We've built up the 3rd largest mineral tenure holding in northern Saskatchewan with over 520,000 hectares, 1.2 million acres. You just simply can't go out and rebuild a portfolio like that. It's taken a decade, and it's positioned us perfectly for this bull market that we're now well into in this uranium market. Very strong management and technical team, which I'll go over. The dual-pronged strategy for focused exploration and discovery company at our main projects at Russell and Moore. But we also have our prospect generator business that offers our investors exposure to a multitude of other projects and operators and potential new discoveries. And we do typically own large equity positions in these companies. We're trying to build this up as a one-stop shop, a go-to name for high-grade uranium exploration and discovery in the Athabasca Basin across a variety of different projects, and also offer investors exposure to these various partner companies. We have a noteworthy shareholder base, including Denison and Rio Tinto as our 2 largest corporate shareholders. We've got Orano as a project partner at Preston, as I mentioned earlier, and we've seen this shareholder base expand from predominantly retail number of years ago to one that is now more institutionally held and family office held and corporately held. So I'll skip ahead here to our management team and board of directors. I won't spend a ton of time here. I think most probably are familiar with us. I've been running the company as the president and CEO since 2014, having been a part of the sale of Bayfield Ventures to New Gold. Worked closely with our chairman, Jim Pettit. Jim was the CEO of Bayfield when it was acquired by New Gold. Dave Cates, president and CEO of Denison Mines, a director of Skyharbour. Needless to say, a very important strategic partnership that we maintain with Dave and his team at Denison. They're our largest corporate shareholder with just under 8% of Skyharbour. And Dave personally has built his position, his equity holding in the company and Skyharbour up over the last several years. Joe Gallucci joined us a few years back as a director. He's the head of investment banking at Laurentian. Our geological team based in Saskatoon, Dave Bayard, been in the industry for almost 40 years. He's built and sold companies, including J&R back in 2012, 2013. He was at Cameco prior to that. One little kind of interesting point here is, and this kind of shows the re-rating potential for some of these Athabasca Basin explorcos over the coming years as we see this market continue to move higher. J&R, when Dave and his partner Rick were running it, back in the early mid 2000s. They took it from a $5 million valuation to well over $350 million in 06, 07, when the uranium price spiked to well over $130 a pound. We've reacquired the 4 projects, the main projects that were in that JNR portfolio: Moore, Yurchison, Falcon, which was called Way Lake, and most recently we finalized that with the acquisition last year of 100% of the South Dufferin project. So it just shows you this immense re-rating potential. We've got those 4 projects locked up in our portfolio. We've got another 20 plus projects outside of that. So again, a very exciting time here for the company. Christine and Sean and Dylan, Christine's our senior project geologist, wrote an award-winning geological thesis on one of our deposits, the Fraser Lakes Zone B deposit. Sean and Dylan joined us in the last few years coming from NextGen, so a very good exploration and technical team with focused expertise on uranium in the Athabasca Basin. Paul Matizik joined us as an advisor. He's built and sold a handful of companies, including Energy Metals, which he sold for almost $2 billion, to Uranium One. So as I said earlier, as the M&A picks up in this sector, gentlemen like Paul will be a very important advisor and person to have helping with that going forward. Andrew Ramcharan, who's our Senior VP of Corporate Development, 20 years in the mining industry, worked at IAMGOLD, Sprott, and SRK, joined us in early last year and been with the company now for a few years, helping out on the corporate development side of the business. So a good mix of managerial, capital markets experience with the management and the board of directors, coupled with focused geological expertise in the Athabasca Basin, a team that's gone out there and has made discoveries in the Athabasca over the course of the last several decades. The cap structure, straightforward, about 181 million shares issued and outstanding. You'll see that we trade on the Venture, the Frankfurt, and the OTCQX. Trading around $100 million Canadian market cap. We're well funded now with over 10 million in the treasury. Again, this covers this initial 8,000 meter drill campaign. That'll run about, call it 3 to 3.5 million over the next several months. So we have plenty to carry out additional drill programs at Russell and more throughout the year. And then the partner companies at our various other projects that we've optioned out have to fund those programs. So the funding, the exploration funding coming in from them. We're also expecting on the high end, assuming all the partner companies make good on their cash and share payments over the next couple of years, we should receive another upwards of $8 million potentially. So we're in a great position financially. We haven't had to raise a hard dollar in a financing, in an equity financing, since August of 2020, just raising from time to time, raising flow through. And with the new critical metal tax credit, you can get a very good premium on that, much less dilutive for shareholders. You'll see some of our notable and strategic shareholders as well, management and insiders. We've continued to build our positions in the company. Dennis in Rio, I mentioned, we're in all of the major uranium mining ETFs. And we've added a few new strategic institutional shareholders over the last several months. You'll see some of the names below. But as I mentioned earlier, we've built a well-rounded shareholder base, if you will. There's still a good, strong retail component, but we've seen more institutional, family office, and corporate participation in recent years. I'm not going to spend a ton of time on this on these slides. I'm happy to field any questions, the Q&A. But you know, as a smaller cap or smaller to mid cap junior in the Athabasca Basin, it's important to note that typically these companies perform best as the cycle matures, as we work our way through the bull market. The capital flows from the larger, more liquid names down into the juniors. I think we're seeing the early days of that currently, and I think we'll see with this sustained bull market that continue for several years here. When we talk about the uranium market, obviously, we all know what's happening with the price. It's continuing to move higher. There just really is no meaningful amount of supply out there, and very little new supply that can come on in the near term. So when we look at the supply demand fundamentals right now, almost 200 million in annual demand, growing at almost 4% a year. That's up substantially from even a few years ago. At least that's the WNA projections. And then we have the primary mine supply now at about 155 to 160 million pounds a year. Now, this is important to note. It's not easy to bring these new mines online. I think that does get lost in the market sometimes. And we've seen just recently the announcement out of Kazatomprom. They'll be guiding their production down in the coming weeks. We saw in September of last year with Cameco having to guide their production down. So it's very challenging to not just bring these mines online, but to maintain that top level of production and ongoing and consistently meet those numbers. So any supply disruption that we see in this sector has a major impact on the market. We've seen that historically, and we're seeing that in this cycle right now. And again, if there's any further supply disruptions, even if it's just a few million pounds, it has an immediate impact on the market. 437 reactors operable right now, 63 under construction, hundreds ordered, planned, and proposed. That's not accounting for any of the small modular reactors or SMRs. Canada, as we know, is building the first one here at the Darlington plant in Ontario. That nascent market is just continuing to build momentum, and that's going to be, I think, a major new source of demand going forward. It could very well be the equivalent to the electric vehicle for lithium and battery metal demand. It could be that equivalent for uranium and nuclear fuel demand going forward. Uncovered demand is continuing to rise. You'll see there over 2 billion pounds of contracting needed by 2040. And so this is always something I like to highlight because we saw last year just over 160 million pounds reported of contracting volume. Now, if we look at the replacement rate of about 180 million pounds, we nearly hit it last year. I expect we'll hit it this year. And if we look at that historically in the mid-2000s, 2010, 2011, when the replacement rate was hit or exceeded, typically we saw pretty quick moves in the uranium price. I think Tim Gitzel at Cameco said it best when he said, we've never been this early on in a cycle with prices as high as they are currently. And that's, I think, a great summary of where we're at in this market. So very exciting time for the sector, very exciting time for companies that are, again, well positioned to take advantage of this rising tide that we're seeing. So I want to just jump ahead here to the projects and what we've got going on over the next 6 to 12 months. So 1.2 million acres scattered all throughout the Athabasca Basin. We provide investors with exposure to pretty much every little nook and cranny of the Athabasca with projects over on the west side, joint venture partners with at Preston and East Preston with Orano and Azincourt, South Dufferin, which we acquired just under a year ago, rounding out that JNR, pre-JNR portfolio. And then we've got our two co-flagship Russell Lake and Moore Lake projects that we're actively advancing. And then you'll see the various other projects that we've acquired over the last number of years, and some of which we've obviously optioned or JV'd out. So moving on to the upcoming drilling. So Russell Lake, and we can talk about these two projects now as co-flagship projects. We're staging out of the camp at Russell Lake for the drill programs at both of these projects. And as I've talked about before, this is almost 110,000 hectares of prime real estate in the eastern Athabasca Basin, just south of the McArthur River Mine, just north of the Key Lake Mill, northeast of the Key Lake Mill. And most importantly, the Russell Lake project completely surrounds to the north, to the east, and to the south Denison's Wheeler River project. So this is very strategic land holding for the company. We obviously signed that option agreement with Rio Tinto back in 2022. And just an update on the earn-in, we can earn up to 100% of the project. We will be complete the initial 51% part of that earn-in in the coming months. So there's no risk anymore of us not earning in any percentage in the project. At that point, we'll make the decision after this winter drill program at Russell, as to how we want to proceed with the remaining part of the earn-in. We can earn another up to 100%, but can earn a 70% stake as the second stage of that earn-in, and then buy Rio out of the remaining 30 through a large payment of cash and shares. So the two potential outcomes here now are we are a majority interest holder in the project, and we have Rio as a JV partner, or we buy Rio out 100%, and Rio in that case would become our largest shareholder. So if you look at Russell on the map here, the darker of the two blues there, you'll see the road that services the McArthur River mine up to the northeast. You'll see the Key Lake Mill to the southwest, and you'll see Phoenix and Griffin being developed by Denison, currently just a few kilometers away from our border and from where we're drilling. It's a big property, again, very strategic land holding. The focus for us in this upcoming drill program is on this group of conductors that you see right in the middle of the project, called the Grayling target area. Now, we did drill most of the drilling that we carried out in 2023 was focused at several targets in this multi-kilometer long conductive corridor. We're going to go right back in there, but this go around, through rigorous refinement and modeling of these targets, and including the results, which last year, it's worth mentioning, we did drill into some of the best, highest grade zones of mineralization at the project. We're still looking to make that big multi-percent larger high grade discovery at the project. But we had what we feel was a breakthrough last year, and really kind of sets the stage nicely for this upcoming drill program. So we're using all that data that we acquired last year, as well as the historical data. And we're going to be drilling the eastern extension to start, the eastern extension of this Grayling target area, which has been sporadically drill tested historically, but it's got all the right indicators. And in particular, it's quite broken up. There's a lot of structural disruption at the conductors there. So that's going to be an initial drill target that we drill test into. Following that, we're testing what's called the Fork target. And this is an interesting one. Our team has done a great job identifying this target, which is on the western extent of the Grayling target area. But as the name implies, you see a fork, a break in these conductors. It's been very, very poorly tested, very little drilling historically, even though it's kind of right in the heart of that main Grayling target area. So we're going to be drill testing that. And then the third and final target in this initial 5,000 meter winter program is a target area called the M Zone extension. Now, this is a direct extension from the M Zone, which is a group of uraniferous mineralized conductors on Denison's Wheeler River project that trends onto the Russell Lake project. What's most exciting about this target, though, and there's been a few drill holes historically at Russell that were drilled at this target area, some very interesting findings in those exploratory reconnaissance holes, not a lot of follow-up work. But Denison's been doing some drilling at their M Zone group of conductors, and so it makes a lot of sense for us to see what we can hit as those group of conductors extend onto our project. The other really interesting thing about this target is there are these east-west trending structures that basically line right up with Griffin and Phoenix. So this is, needless to say, a very high priority target, as we're basically testing to see if those east-west trending cross-cutting structures could be a structural control and a main influence on the deposition of mineralization. So a very, very strong plan. Again, like I said earlier, we're very confident with the program. 5,000 meters, it'll get us the initial 51%. And then once we complete that initial drilling at Russell, we're going to move the rig over and we're going to carry out a 3,000 meter drill program at Moore Lake. So like I said earlier, this is the first time that we're drilling both of these advanced stage exploration assets, these co-flagship adjacent projects, and very, very keen to get back to work at Moore Lake. As most that follow Skyharbour will know, the last drill program we carried out there was well over a year and a half ago. And one of the first drill target areas that we're going to be drilling at is actually going to be right back at the high-grade main Maverick zone. We have not drilled back at this main high-grade lens since 2017 and 2018. So this is exciting for us. We think there's a good, strong expansion potential right in the heart of the main high-grade zone there. Again, there's drill results as high as 21% U3O8 over 1.5 meters, 6% over 6 meters. We're going to go back in, and we think there's more that we can expand upon there. We're going to continue drilling a little bit deeper into the basement rocks as well. That's really been the focus over the last 4 years at this project, 4 or 5 years at this project, is drilling into these underlying basement rocks. And we've had success. We made a new discovery at the East Maverick Zone just a few years ago. And we are also planning to test the Grid 19 target area, which is a regional target just northeast of the Maverick corridor and the main Maverick zones, the high-grade zones there. It's been relatively untested or poorly tested over the last 20 or 30 years. It was a relatively new target that we identified on the project. So we're excited to go and continue testing some of these regional targets that we think still have a lot of upside, blue sky potential and discovery potential. So that's the 8,000 meters at Russell and Moore. That'll provide ample news flow right through into the spring and summer months. And we are planning right after we finish the drilling and announce results at these two projects over the next several months to gear up for summer and fall programs, which again, we're fully funded and permitted for. Now, I won't spend a ton of time going through each and every individual option or JV partner and agreement that we have. But again, this is a good slide that summarizes the prospect generator business. Of particular note, and as I mentioned earlier, both of our joint venture partners, Orano and Azincourt, are planning programs this year. Orano, for the first time in several years, it's good to see that they're applying funds and capital towards that Preston project. We're going to elect to participate as a minority interest holder in the project. Valor Basin, Madero, Tisdale, North Shore. So we are expecting of the 6 listed partner companies, option partner companies here, at least 3, potentially 4 of these companies to be active this year, whether it be drill programs or larger field and exploration programs. In particular, and more recently, in announcements and news releases that have come out over the last several months, we finally now have a program planned, Tisdale Clean Energy, at the South Falcon East project, host to the Fraser Lakes Zone B deposit. They are planning an initial 2,000-meter drill program over the coming months. I can't express how thrilled we are to finally see this getting the drilling and exploration it deserves. This project we worked on back in 2015. We had some notable drill results from a program back in 2015. Unfortunately, there was a completely different uranium market then, but I think with the uranium market where it is today, any numbers from this project will go a long way. So Tisdale is planning that program to commence here in the coming months. They're going to be staging out of our exploration camp up at Russell Lake. So that's another benefit of the acquisition of Russell with the infrastructure with that camp there. Is it's not just helping bring our drill costs down relative to other companies and other projects in the base, is also helping partner companies as well that are exploring on some of our other projects nearby. So look for news flow on this project over the coming months. This is our largest financially largest option agreement, almost 22 million in combined project consideration. That's exploration funding, cash and shares potentially coming in as Tisdale advances this project over the coming years. We're also expecting and have announced a drill program from the adjacent Falcon uranium project. Was previously called the South Falcon project, now renamed Falcon. This is the option agreement we signed last year with North Shore. They are planning an inaugural drill program there, again tied in with that, with the program on the adjacent South Falcon East project. They'll be utilizing the camp that we have at Russell, and there'll be some commingling of contractors and resources, which will help bring the drill cost down for both of these companies. So here are two drill programs slated to commence in the coming months, both of which could deliver new discoveries and expand on existing resources. So very, very exciting to have these two companies get to work on those projects. I mentioned the Preston project. We'll have news out detailing the upcoming program that Orano, as the operator, will be carrying out, and we're going to participate in that. East Preston, Azincourt's done a fantastic job over the course of 6 or 7 years now advancing this project. Number of drill programs that have been carried out. They've been intersecting some mineralization and all the right indicator minerals, clay alteration. So we expect that they'll be completing another program at some point this year as well. If we just move along, Yurchison, with our partner Madero, they do have plans to explore and advance this project at some point over the next 6 months. We'll have probably have some news out on that at some point sooner than later, and as well at our Man Lake project, our partner Basin Uranium. They've nearly spent all of the exploration dollars that they needed to. They have, I believe, just under $1 million that they need to spend to complete the earn-in. So we are expecting some additional work there. Project that is right on that main mine trend. It's had limited drilling. It's adjacent to another project called Man Lake, where there was a major high-grade discovery a number of years ago. That's now owned by Cameco, Denison, and Orano. So a very strategic project, and we're looking forward to more work being carried out at that project. South Dufferin, we own 100% of. As I mentioned, this was the final piece of the puzzle to complete the JNR, the 4 projects that they had in 06, 07. So we did the deal with Denison to acquire 100% of this project. We're actively seeking partners, and we're in advanced negotiations on bringing in a new partner company. It's a drill-ready project. It's on trend to the Centennial, Cameco's high-grade Centennial deposit. You'll see some other big names that are in the region, Orano and NextGen as well. So kind of a quiet acquisition that we carried out last year, but really this could be a company maker for new companies looking to build portfolios in the Athabasca Basin. And this just highlights some of our more recent property acquisitions. Again, well over 520,000 hectares, 25 properties. Continuing to add to that. Look out for additional news releases as we continue to stake and we continue to get deals done with other companies. We're going to remain opportunistic when we can. It's becoming a lot more challenging, though, to acquire these projects. Needless to say, a lot of the low-lying fruit's been plucked. So we rely on our geological team that knows the basin very, very well. They've got a competitive advantage there, and they've done a great job continuing to bolster our portfolio with new projects that we can then look to farm out to new companies coming in as option and JV partners. So just to wrap up here, upcoming catalysts. As I highlighted, this 8,000 meter program, winter program at Russell and more. I mean, what could be more exciting than a brand new high grade discovery with uranium over $100 a pound? Again, it's our first time drilling both projects, at Moore Lake. We're expecting to get some results there, given we're doing some infill and definition drilling at the main Maverick zone. But the regional drilling at Moore and the drilling at Russell, it would be incredible if we wake up and there's a brand new big high grade discovery at one of those targets. So keep an eye out for news flow. 8,000 meters coming up. As I mentioned as well, our various partner companies that are going to be actively exploring and advancing our secondary and tertiary projects, both of the JV partners and likely 3 or 4 of the option partners over the course of the next 6 to 12 months, additional project acquisitions, as I just talked about, and additional new option and JV partners. As I said earlier, we're getting a lot of inbounds and a lot of interest from companies looking to build project portfolios in the basin, but also from companies that may have existing projects in the basin looking to expand on their portfolios. So it's going to be a great year. I think it's going to be a breakout year as we continue to see this uranium price and market move higher. Very exciting for some of the smaller cap and mid cap names that, again, typically do outperform later on in the cycle. We've positioned the company and will continue to position the company to take advantage of this rising uranium price. And I think we're also in a good spot going forward for a potential corporate transaction down the road. So with that being said, thank you very much for tuning in. Dave, I'll hand it over to you for any questions.
Great. Thank you very much, Jordan. You certainly covered a lot in that time period. So sounds like it's going to be another busy year.
Absolutely.
So let's kick off the Q&A portion of the webinar. Type your questions in. We'll get to as many as we can. So we've got a few here already. The uranium price, it rose from 48 to 65 by WNA in September, and then 92 by year end. Obviously Cameco and the producers benefited early, some selective big developers, but the smaller explorers and developers didn't start moving until recently, just sort of as you said in your wrap up there. And I think therein lies the opportunity for Skyharbour, especially if we see disruptions or slowdowns. But do you really agree with this? Is this something you see persisting as uranium prices continue to rise? Investors will come downstream?
Yeah, absolutely. I mean, look, this is how it works. This isn't unusual that the larger and more liquid names outperform, especially in the early days as the uranium price is moving higher. Sophisticated money, institutional money that's looking to get in early on the trade. They're not buying the liquid juniors, right? They're buying Cameco, they're buying UEC, they're buying NextGen, and as the market matures, obviously all these companies are going to perform well as the uranium price continues to move higher. But we see this time in time out with any commodity, any bull market. The juniors typically do have the biggest move towards as the cycle matures. So you pointed out I think we've started to see that. I still think it's very, very early in terms of when you look at the valuations of these companies relative to where they were in 06, 07. I mean, again, I use the direct comparison for Skyharbour to JNR. JNR with those 4 projects, $350 million market cap in 06, 07. So that's about $500 million in today's dollars. We're a fifth of that, right? There's other peer group companies in this kind of $50 to $500 million valuation range in the basin. You can really just count them on one hand that I think are gonna outperform. I think they're poised to have a big year, Skyharbour being one of them. And I also think they're going to be in the crosshairs of larger companies.
Mm-hmm. Do uranium prices really matter to you? Other than the rising tides lifts all boats for exploration companies?
I mean, look, needless to say, I'd like to see it, continue to move higher. Absolutely. I mean, look, it does matter, especially, if you're in the ETFs, for example, if you have an investor base that, like we've got lots of investors that want exposure to uranium. They've maybe purchased, Sprott Physical Uranium Trust and Yellowcake, or Cameco, some of the larger names, and they really at the end of the day just want to ride this uranium wave. And again, so now they're looking at some of the smaller and mid cap names. And so, yeah, look, it absolutely, I want to see the price continue to move higher. It does matter. We've seen obviously the spot price have a big surge, a big move in recent weeks. The long-term contract price moving up as well. But yeah, I mean, look, if we see, $150, $200 uranium, I didn't think I'd be saying those prices, talking about those prices a year ago right now. But if we see that kind of price action over the course of this year, I mean, we talked about this offline, Dave, the number of inbounds you're getting from companies, from investors. I think we've just seen scratch the surface of the generalist investor really kind of coming into the sector. And as uranium price, moves higher, especially if we see these, like 150 hit, 200 hit, I'm not saying it's going to get there, but if we did, I just think it opens the floodgates to more equity investors, generalist investors coming in to all of these companies.
You've said lots of investors, you've got Denison, Rio, Mr. Cates himself. How many institutions follow you right now? Who's calling Jordan Trimble these days looking for exposure to uranium?
I'd say, noticeably from, I'd say, August of last year, September of last year, post WNA, we were getting inbounds from, not the funds that, we've kind of built relationships with, or we know, or they're, existing shareholders. I mean, you think about, we know who they are. They've done a phenomenal job now with this, over, sticking with the trade, but really some of which becoming big cheerleaders for the sector. And now what we've seen, as a very kind of small part of this market is, getting inbounds from new money, from new funds that, maybe had it never owned a uranium stock. It never had any exposure to the commodity. And, they've done their, 6-12 months of homework and due diligence. They're starting to position themselves in the space, buying a Cameco, buying a UEC, buying a NextGen, buying a Sprott, right? And now they're looking at other opportunities downstream and reaching out to companies like Skyharbour.
I think the world changed that first week of September. I think all 60 people that attended the Red Cloud dinner in London picked a uranium price, and I think all of them are low.
I can't wait. I can't wait to see what those projections are next year, because I agree. I think everyone was bullish going into this year. I don't think anyone was expecting this kind of price action that quickly. I mean, this just shows you how tight this market is, right? And there's no quick near-term fix. There's no Band-Aid to put on here. I really think this is going to be a breakout year. And look, there's a value trade even in the middle of this bull market. There's a value trade right now in the smaller and mid cap names, and I think that we'll see that capital flow into that over the coming months.
Yeah, absolutely. I've met a lot of new institutions ready to come in and even come downstream. So that's definitely positive. So you guys, you're very disciplined when it comes to raising funds. Typically you can run your company through cash payments and delivery of third-party shares. And, like you said, probably 18 million in cash and cash on its way. Is this still your MO? Would you like to consider, maybe a larger war chest, maybe make more material acquisitions here, something?
Yeah, it's a good, and we've talked about this, and it's a great question. Yes, we have been very disciplined. We recognize that raising as much money as you can when you can in this kind of a market. Look, if the market continues to move higher, the cost of capital goes lower, we would absolutely consider that, but we're very selective, as you know, and a big part of that, quite frankly, has to do with the fact that our end goal here is some type of M&A, right? We want to and we want to deliver as much return for our shareholders as we can. So we're always kind of weighing that. Does it make sense to raise money now, typically just for flow through for exploration, or does it make sense to, we continue to get money in from the option and option partners, and we had some warrants exercised over the last few years. What makes the most sense? Obviously, as the prices continue to move higher, the valuations move higher, it becomes more appealing and more logical to raise money through, placements and through issuing equity. But look, it's only been in the last few months that we've seen this recent surge higher in the market. We capitalized on that. We raised money through a charity flow through in the high 70s, and got a good price, and it was just a few institutional strategic shareholders. So we will continue to be selective, but I'll say that as the market continues to improve, and certainly if as we have success in the field, it would become more appealing for us and make more sense for us to go out and add to that war chest.
Mm-hmm. Okay. Yeah, one thing about a hot uranium market is that there's a large increase of news flow. Skyharbour suddenly must compete for attention amongst a lot of other companies. So do you believe that might require you to accelerate your news flow, specifically at your Advanced Moore Lake project and at Russell Lake? And I guess Russell Lake in particular, your team has loved that project literally for decades, and it's in the land of giants.
Yeah.
Should you be putting your best foot forward now when you need to compete against others?
Yes, and we are, right? I mean, that's exactly what we are doing here. And this, as I said, will be our largest individual seasonal program, winter, spring, 8,000 meters. We've got the funds to ramp it up. We've got the funds to carry out additional drill programs throughout this year, summer and fall. As I emphasized earlier, we're as confident going into this program as we've ever been on any drill program that we've carried out. And we've got this dual-pronged strategy of drilling both projects now, not just Russell or Moore. We're going to go in and drill both. We have the luxury of doing that at relatively inexpensive all-in per meter costs because of the infrastructure at Russell. So look, we're cognizant that there is more noise out there, if you will, but we're going to continue with I think if you look at the last couple of years, out of all of our peer group companies, we've been very, very consistent with the news flow, because we've got obviously the projects that we're focused on, but we've got a lot of news that comes from these partner companies, right? So and as I said, we're I think especially with the market doing what it's doing right now, I think we're going to be able to fill out this prospect generator business even more in the coming months, and also make sure that the partners are active, right? It's nice to have a partner company, but they're not doing anything. It doesn't really do anyone any good, right? So that's a part of it too. We want to be partnered up with the right partners that are going to be that are able to raise money and that are going to be actively advancing those projects.
You have a lot of input there, right? Your technical team is sort of instrumental at helping design a lot of these projects as well, because you guys have the experience.
Yeah, we do. We don't typically run the program or the projects as the operator, but yes, we will typically help as much as we can on programs, target selection. In the case of South Falcon East, because it is a project that it's more advanced stage, it's got a small resource there. We did build in a clause that allows us to have a final say in the programs, but so that's a very collaborative. In practice, they're quite collaborative processes in terms of going in and planning these programs with us and the partner companies.
Okay. Excuse me. Moore Lake, it's your most advanced project here. Remind us when we should look for the initial resource from the Maverick Zone, and
so
what we the next steps.
Yeah, so we as we've been working on this, and we are planning a part of this, the target selection in this upcoming drill program, as I mentioned, with the infill and expansion drilling at the high grade core. That's host to a lot of the pounds at Maverick currently, right? So we haven't drilled that high grade core since 2017 and 2018. With very high grade zones of mineralization, you can get core loss. So you report the results in grade equivalent. Typically that understates or underestimates the actual grade. And so part of what we're doing, and tied in with the resource estimate, is this drilling at that main high-grade zone. We think we can expand it. We think we can put an even better foot forward with that. So, this drilling is taking place in the next couple months, and I'm expecting that we'll have that report out shortly thereafter.
Okay. M&A activity, as we mentioned, is increasing considerably here. Has this increased the need for your project generator business to go out and stake ground? And I guess, who are the buyers? I think the last time we spoke last year, a lot of Aussie companies were coming to the Athabasca, but I've noticed it's the Canadians doing a lot of M&A lately.
Yeah, look, I think, we've seen, a mix of American, Aussie, Canadian, other Canadian companies. There's been a number of notable transactions over the last several years, UEC with UEX, more recently ISO and Consolidated, and even more recently, you've got Latitude 92E and ATHA. And so, yeah, look, I think this is a trend that continues. As I said earlier, I think we're in a good position. We're exploring these opportunities as they arise, and we're very much focused on ultimately with this company an exit, if we can, at the right time and at the right price. That's the one thing here too, right? Is we are seeing this market move higher, and so it's our goal, our job is to obviously get the best price possible, if and when we can. So yeah, look, it's our doors open, right? And we've been very clear about that, and I'm confident that with the market doing what it's doing, and with the project portfolio that we have now, we've continued to build with the exploration the drilling that we've carried out and our partners have carried out. This company would be an attractive takeover target for others looking to establish themselves in the basin and/or expand their existing holdings and project portfolio in the basin.
Mm-hmm. Yeah, you've mentioned this exit strategy on various occasions in the past. What might you consider? Is this something that you're thinking about a little bit more now that the prices are up over $100 a pound, or is it actually something that is slowing you down because prices are just rising so quickly?
No, we're thinking about it, and it's the prices go higher. That's gonna incentivize more of these transactions to happen, right? That's as you're well aware, most of the M&A typically happens right at the top of the markets, right? So that's an exciting prospect for us. So look, we're focused on our upcoming field programs, our drilling. Continuing to execute on the prospect generator business, making sure that the partners are active, and we're also acquiring new ground. We're day to day, we're focused on that, creating shareholder value, executing on our business plan. But I'd say in the backdrop there is, as we've seen over the last year and a half, this M&A wave is starting to pick up some momentum.
Yeah. We're even seeing some companies spin out the non-core assets.
Right. And, we saw that here earlier this week. Look, I'm not going to say we're imminently doing that. But, you and I have talked about this. We are in a good position down the road to do that, given the 25 projects we have and this dual pronged, Russell, Moore Lake focused exploration and the prospect generator business. So, it's something we would consider if the timing's right and if it makes sense and we think it can create value.
Mm-hmm. Yeah, and at risk of repeating myself, I think you've been so efficient with the project generator business. No equity raises, almost 4 years now, $37 million of other people's money being spent on your ground, $20 million cash coming in from your JV partners, 28 more million in stock, coming in from JV partners. I think odds are someone will find something on your ground before something else. So that could be the case. I'd say, needless to say, we believe that the best prospects in our portfolio are at Russell and Moore. Any drill hole at either one of those any drill hole at a zone that, or at a target that doesn't host high grade already,
could deliver immediately a new high-grade discovery, right? It's, both of those projects are very much ripe for additional high-grade discoveries. But yeah, you're absolutely right. There's multiple irons in the fire. We've got other companies that are drilling, that are going to be exploring and expanding, on known zones of mineralization at some of the other projects. So if any one of those hits, it'll be a big announcement for us and them. And we offer exposure through an interest in the project, sometimes an NSR, but also through an equity stake in that other company.
Okay, so we're coming up on time, Jordan. So I guess just to sign off here, how many projects do you have right now? And, maybe tell us, how do you value a project or a land deal when you look to bring in a partner?
So we're at 25 projects right now. Now that moves around a little bit because we're always staking and doing deals, and so we're always looking to add a ground that we think is prospective, that we think can ultimately be an effective project in the prospect generator business. And so when we're looking to bring in partners, they have to be able to raise capital. You don't want a partner that just sits there and arm waves. You got to have someone who is actually going to get to work. So raising capital, we want to make sure that they do have, some geological presence and team that can stick handle the programs. Again, we help out with that, but pretty much all of our partners will have a geological team that is really kind of doing the day-to-day. And yeah, look, I think another part of it too is much like we do, we want to make sure that they're careful and methodical about how they raise money and maintaining a capital structure. It's not always easy, as we know. You need to raise money and you need to dilute to carry out these programs. But as the market again continues to move higher and the cost of capital gets lower and more available, this is exciting for us, knowing that these partner companies have access to that now, and probably would not have 4 or 5 years ago.
Right. Goals and intangibles are sometimes just as important as the sales price.
Yeah, absolutely. Yeah. I mean, look, the sales price, cash in stock and exploration expenditures over a period of time. The exploration expenditure is probably the most important, knowing that they're going to go in and potentially, make a new discovery. But obviously the cash in stock is nice, keeps our equity dilution in check and mitigates that risk for our investors. But yeah, I mean, we do want to make sure we partner up with good partners. And if the partner, just isn't cutting it, then, we'd have to part ways.
Right. Okay. Jordan from Skyharbour Resources, as always, it's been a pleasure talking to you today.
Thank you very much. Again, really appreciate Red Cloud and Dave, you hosting this, and thank you everyone for tuning in.
Yeah, thank you everybody for tuning in. As Jordan said, reminder, the Red Cloud Securities will be back after the VREC conference, and Tim is going to sit down with Japan Gold. So that's coming up on Wednesday, January 24th at 2 p.m. Eastern. Have a great day, everyone. Thank you.